So the more and more I work with people and try to help them grow their video production company, I notice a very common problem around pricing. In fact, there's 3 really common mistakes that almost everyone I talk to makes, at least one of those mistakes, when pricing their video services. And because I came up as a freelancer, just like a lot of the people that I've talked to, we make the mistake of pricing our video production services the same exact way as we priced our freelance services, where we're just basically billing or sending an invoice for ourselves, not a full production service. So I want to make this video to point out those 3 mistakes that I've commonly seen, why you should avoid them, and exactly how to fix those mistakes, how to actually do it right. And I want to show you a real life example here on my accounting software, and I'll make a real estimate. So I'm here inside of QuickBooks, and we'll use QuickBooks here as this example. And the very first thing people typically do, especially again if you came up as a freelancer, is you put your rate, so whatever your day rate is, your half day rate, your hourly rate, plus you add whoever else you're hiring, their rates, plus you usually add whatever equipment that you're bringing onto the shoot or you're renting, and that gets you your total cost. So let me show you that first. I'll hide myself here. So I'm director of photography, so I'm gonna put myself there. Let's say my rate is $800 for the day, and that day is 10 hours. So that's your day rate for 10 hours of work. That's about $80 an hour. Around Chicago is a pretty standard rate for a director of photography. Now, any rates I'm mentioning is just based on an average of where I work around Chicago, but I've worked in lots of different states in the US and it's typically around this rate. Then let's say I need to hire a gaffer. So I will bring a gaffer with me, and let's say I could hire a day rate gaffer for 10 hours at $650. And let's say we need a sound mixer. So I'll put in sound mixer or audio tech. Again, the same day rate applies to an audio tech. And usually audio tech come with a bundle. So they come with their gear, and let's say that's $900 with gear. So right now I'm at $2,350, but you're not gonna stop here because I'm showing up with a camera and maybe some lighting, or the gaffer is showing up with some lighting. So I'm gonna put in some camera equipment. So that's a 4K camera package with lenses, let's say, and let's say that's about $400 with all the lenses and tripod and everything else I need. And let's say we have some lighting equipment, and we're just bringing a couple of simple lights here. Let's just say that's gonna be $350 worth of lighting and grip gear. So lighting and grip gear. Okay, and the sound guy, we already decided the sound guy is bringing his own gear, so we don't need to bring it as a production company. Let's say I work at the production company. This is my production company, and I hired myself as director of photography. I chose not to hire someone else, but I did hire a freelance gaffer. I hired audio tech, and this equipment I own, but you have to charge for what you own, even if it's fully paid off, because you need to basically have these on a line item so you could eventually upgrade your equipment. Even though you have it, it shouldn't be part of your labor rate. This 10 hours is my labor. This is my equipment. That's how I could buy more equipment every couple of years when it gets outdated. So we're at $3,100. So usually, after talking to people, some people didn't even include their gear, which wasn't even one of the mistakes I'm covering. So definitely always include your gear. You don't have to itemize it this way, by the way, for the client. You could just say production services, including labor and gear, $3,100 as one line. You don't have to break this down. In fact, usually I tell people not to break it down because people will be like, well, why do we need 2 lights or 3 lights if you really line item it? So I usually don't even approach it that way, but I'm just showing you the breakdown of what I would keep to myself internally. Okay, so why wouldn't I bill the client $3,100? What happens if I bill the client $3,100? Well, this is what happens. If you just bill a client $3,100, we just basically created a job, a total freelance job for ourselves, where we're giving away our time and we're giving away our equipment, again, for a freelance rate. Basically, if you do this, you don't have a company. You will never have a company. You just created a freelance job for yourself where you can maybe hire your friends as a gaffer, as a grip, as an audio tech, or find other freelancers to help you, right? And this is just a production end, by the way. I'm not talking about the editing, which I've covered in different videos. So what do we do instead? What's the first mistake? So the very first mistake is that we don't have anything built in for actually managing this project? How about all the time that we went back and forth emailing the clients? How about the time we took to basically book everybody? How about the time for packing gear, for invoicing, for paperwork, for the contract? A lot of people forget that, but if it's not built into this cost, you're basically just giving the people their rate, you're keeping the rate for yourself, and you're losing all the hours it's taking to set all this up. And you actually can't ever hire someone to take care of project management this way, right? You have to do it basically for free. So what do we do there? Well, let's go ahead and add another item to solve problem 1, which is project management. So I'll put production manager, and let's say a production manager gets paid hourly. Let's say they get $50 an hour to take care of this for you. If you're doing this yourself, put in what you think your hour is worth. So I'm gonna put 50 an hour. Again, I'm not showing the client this information. I'm just typing this out for you. And typically, I know between putting together the emails for the crew, for the client, the back and forth, even the managing the editor, this may be up to like 6 hours of work. Okay, so 6 hours times $50, that's an extra $300. Now, this again could be a huge range, right? Sometimes a project management could be an entire week's worth of work. It really depends on the project. Just for the sake of this is $300 that we were just gonna lose out on, or basically do this for free if I didn't include it as part of this budget. So that's mistake number 1, is not building some sort of pre-production. If there is creativity involved in this project and just not a crew going out, right? So sometimes what's called a full service production. You're doing the creative, you're doing the production, you're doing the editing. Well, I didn't build in anything for pre-production as far as like, hey, are we putting together a script? What about the idea? What about the concept? All of that is pre-production. So make sure between project management and pre-production, you always build that in if it's required for the job. Pre-production is sometimes required for a full service production, and a production manager is always required regardless of size of the job. Even if you're doing the job, you're sending emails, you're doing work, you're invoicing. Make sure you account for that. If you think like a freelancer, we used to do all that stuff basically for free in exchange for a day rate. Don't do that if you're trying to make an actual video service that could grow beyond just you. All right, let's get to mistake number 2, which if we just bill the client $3,400, we are making no money as a company. This is basically just me making money for myself. Maybe if I'm the production manager as well, making money there. And I've also made some decent money towards my gear, but you know, in this case, maybe that's over $10,000 worth of gear I'm bringing along. So I do have to make sure I pay that gear off or save money for upgrading later. That's what this is. So what about profit? Without profit, we don't really have a business. We basically created a freelance job for ourselves. So how do we figure out profit? Okay, let me just give you the common way where people do profit. So a very common way that video production companies calculate profit, and this is just the most basic way of pricing, is they usually think of profit as 20% of the total cost of the project. So in this case, the cost of the project so far is $3,400, right? So if we just do a little simple math times 0.2, that's 20%, that's $680 more worth of profit. This is what the company is making, right? So you gotta take yourself out of the equation here and think of the company. If I wasn't available, I would still take on this job and I would hire another director of photography. They would go do the job. Maybe they want to work with their own gear. And if I did that, I will make $0, right? So that's where the profit comes in. So if I put the profit margin here, I'll put it under production services. Let's say this is your profit of 20%, which is very reasonable and very common. So you would put that in, and that was $680 based on the math so far. So this is now you're getting a $4,000 shoot, right? This is a 3-person shoot with equipment plus profit with some production management time, no editing, right? But we're already at $4,000, right? So if you're doing jobs less than that, just know this is very, very common for production companies you may be competing with, and you may be underpricing yourself. So mistake number 2 is having no type of profit built in, and you're just creating a freelancer work for yourself, which is not what we want to do. We want to build a real successful company that could have a profit margin built in just like any other company out there. So what about the third mistake? Well, so far, if we fix mistake number 1 and 2, we still come across a problem. We have no money for the actual business outside of the profit. The profit means the money that the business needs to keep. But there are some overhead costs that a business is going to have. There's no way around those overhead costs. If I'm doing a shoot like this, I have a bunch of insurance policies that I have to have, right? So if you don't have those, there's one called general liability insurance. If you don't have a general liability insurance for your production services, you already are putting yourself at a risky position. And that could be thousands of dollars a year. There is, besides just the liability insurance there's worker comp. They have automobile insurance for commercial auto. Even if you're driving your personal auto, but it's the work vehicle, right? So there's a ton of different insurance policies. That's part of the overhead. If you have an office, that's overhead. If you have an email provider, if you have a website hosting, there's just random overheads that you're not accounting for. So how do we actually calculate for that? Well, usually, if you do a 20% profit margin, your overhead is getting cut into that profit margin. So if your overhead is 20%, even if you're working from home, basically over time, you're cutting into that production or that profit margin. So you gotta improve your profit margin. And the biggest problem I've seen when people work off of this, even with these issues fixed, how do you get new clients? There is no marketing budget whatsoever. You would have to take that 20% profit and keep trying to get new clients. This is why I could give my existing clients better pricing, because I don't have to build in the cost to acquire that client. They're already my client. I could give them a good deal. But when I'm running ads, when I'm doing paid promotions, when I'm doing marketing to get clients, I have no way basically to have any money built into the cost of that. Where am I exactly getting the money? Like, let's look back in here. How can I take money out of this $4,000? Well, there's a few ways. I could hire someone that's not $800, right? I could hire someone much newer at $400 a day, but then I'm gonna come across quality problems where I can't deliver the client this type of work. I could hire a non-union gaffer, right? And someone maybe is coming up, maybe $300, $400, right? I could cut all this down. But then I can't provide the quality of service that I've been providing. I could use a $100 camera. I could use no lights. I could basically try to do sound myself and shoot the video, right? I could basically just take everything back to how I was doing it 15 years ago. But we're building a business, so I'm showing you where I want you to be in a few years. So it's okay if you start with lower rates than what I'm showing you here. These are Chicago rates based on having a lot of experience in production. But this is just for one day of shooting what I'm showing you. So it adds up, right? If I got a week shoot at this rate, it could be 20,000 plus another 20,000 in edit. That's how you get the bigger projects, right? So my whole point with this video was solve those 3 problems. First of all, make sure you always built in gear into the cost so you could actually upgrade even if you own the gear. Make sure, then the second thing we talked about, make sure in your pricing model that you actually include profit. Again, don't show that to the client. That's something you built in and you decide that for yourself. Comment 20-25% is very reasonable profit. You'll see sometimes when you look at companies' balance sheets, like public company like Disney, their profit margin is way bigger than that even before they get to the operating cost of the business. Then once you do all of this, you basically want to make sure there's even more money for acquiring customers, overhead, insurance, basically everything that is costing you to do business. Again, this is not going to go here. You could basically just change your profit margin. So if you think of profit margin as 20%, if you did it at 30%, that other 10% could go towards your operating cost of running a business. And the last thing I'll mention is sometimes I've seen people, just an example I'm showing you, they basically line itemize everything and then they put another line called production services profit and they put their profit to show the client their profit margin. Don't do that. Nobody does that. That's just not how you put together a pricing package. So the profit, you will build it into the cost. So you would add 20% per line item rather than having a line item that says 20%. And I do recommend, if you are a little bit more advanced, don't even break this down, because let's say you had 2 cameras for this shoot because you know this shoot requires 2 cameras. Some clients may come back and be like, no, we should cut one camera. And then it ruins your day because that's the type of day and type of job that requires 2 cameras. And then you're gonna kind of be stuck with that in the editing process. So hopefully this was valuable to you. Again, this is from me working with people as I'm putting together a full course on this topic. Again, that is only a few weeks away at this point. If you haven't signed up for the email notification for that, I will link it below in the description. It's going to be a full course for taking people from freelancers to running a successful video production company, learning exactly things like this that could be very tactical and very useful. I hope you found this useful. I will see you next time.